Hey everybody, and welcome back to Top Tickers. We're doing a deep dive today into APA Corp's Q3 2024 earnings call.
Yes.
So for those of you who maybe aren't familiar, APA Corp is an American hydrocarbon exploration company, and they've been making some pretty big moves lately.
They have.
Like portfolio changes.
Yeah.
And so we're going to unpack all that today and kind of get into the nitty-gritty and see what we can find.
Yeah, it's been a really interesting couple of years for them. There's been a lot of transformation in their portfolio. Over $5 billion in acquisitions, $2.5 billion in divestitures.
Yeah.
Really reshaping the company.
Yeah, and I think the big thing that kind of jumps out to me is they're going all in on the Permian Basin.
Permian, yeah.
So what is it about the Permian Basin? What is the strategic thought process behind that?
So it's interesting because there are three key benefits that APA is aiming for with this Permian focus. First, it's all about scale. They want to significantly increase their production capacity in the Permian Basin. Second, they're looking for longevity.
Okay.
They want a longer drilling inventory.
Got it.
Which means they can keep pumping for an extended period. And third, lower operating costs.
So it's not just about pumping more oil, but it's about doing it efficiently and over a longer period.
Exactly. Yeah.
So it's like playing the long game.
They're playing the long game.
I like that. But then we also have to talk about Egypt. They're making a big play in Egypt, but this one is natural gas.
This is gas, yeah. So that's one of the fascinating things about their strategy. You've got this big oil play in the Permian, but then they're also looking at natural gas, and they just secured a higher price on incremental gas production in Egypt.
Which is good, right?
It's a good sign.
That means that they're bullish on natural gas. They see a future in it.
Right.
And they have a lot of land in Egypt that's underexplored.
Huge acreage position.
Yeah, so what if...
that they haven't fully explored yet.
Yeah, what if they hit a massive gas field there?
I would be a game changer.
That would be a game changer.
Yeah, absolutely. Yeah. But we have to think about it globally.
Okay.
The demand for natural gas is rising worldwide, right? It's seen as this cleaner bridge fuel.
Right.
And so if they make a big discovery, they could be really well positioned to take advantage of that.
It makes a lot of sense. Okay, so Permian, Egypt, but then there's also Suriname. The offshore project is a big one too.
This is huge. So the Grand Morgu project is going to cost them over $10.5 billion.
Right.
But it could produce 220,000 barrels of oil per day.
Which is a lot.
That's a lot of oil. And they say the cost is only $19 a barrel.
$19. That's impressive.
It is.
Especially with all the capital expenditures and operating expenses.
Yeah, that includes everything.
Wow.
And on top of that, they've negotiated this capital carry provision, which helps them with the upfront costs. And the best part is they're not taking on any new debt to fund this. That's a sign of strength.
Yeah, that's a sign of strength for sure. All right, well, we're going to have to take a quick break, but when we come back, we'll talk about the North Sea and what their plans are there and kind of look ahead at their future.
Looking ahead at 2025 and beyond.
Yeah, it's going to be exciting. So stick with us. We'll be right back.
We'll be right back. All right, so the North Sea.
Yeah, the North Sea. What's going on there?
They're actually pulling out.
They are.
By 2029, they're ceasing production.
Wow. Why is that?
Well, there are a couple of reasons. New emissions regulations in the UK would mean they have to spend a lot of money to upgrade their facilities.
Okay.
And on top of that, the UK has that energy profits levy,
right,
which is basically a tax on oil and gas production profit.
Right.
So it's just not as profitable anymore.
Yeah, it's not as financially attractive. So what happens when they pull out? What are the financial implications there?
Well, they have to take some asset impairments. So they've reduced the value of their assets on the balance sheet, and they've also had to write down their reserves.
Yeah, okay.
Because they're not going to be extracting as much oil and gas as they thought.
Right.
And then there are abandonment obligations.
Abandonment obligations? What is that?
That's the cost of safely shutting down operations.
Okay.
And that's going to be a big one, like $1.2 billion.
Wow. So $1 billion just to walk away.
Pretty much.
But I guess in the long run,
it saves them money.
Yeah.
And it lets them focus on more profitable areas.
Right. It's like cutting their losses and moving on.
Yeah.
So let's talk about APA's future for a second.
Yeah.
They've got a lot going on.
They do. Permian, Egypt, Suriname, and they're pulling out of the North Sea. What's their plan for 2025?
Yeah, what are they focusing on?
Well, they've given us a preliminary capital budget of $2.2 to $2.3 billion for the U.S., Egypt, and the North Sea.
Okay.
Plus another $200 million for Suriname development and $100 million for exploration, mainly in Alaska.
Exploration in Alaska. That's interesting. So where does cost control fit into all of this?
It's a big focus for them. They're actually targeting a 10% to 15% reduction in per unit operating costs.
That's ambitious, especially with inflation the way it is.
Yeah, it's aggressive.
But I guess it shows that they're serious about maximizing profits.
Absolutely.
It's a good signal to investors.
But it shows that they're focused on generating strong free cash flow.
Free cash flow. That's music to investors' ears.
It is. It means they have more money to invest in growth or return to shareholders.
So it's a balancing act between growth and stability.
Yeah.
And they seem to be doing a good job of it so far.
It's definitely something to watch.
Yeah, APA is definitely a company to keep an eye on. So what do you think? Where do you see APA heading in the long run? Let us know in the comments. We always love to hear from our listeners. But now it's time for our favorite segment.
Oh, yes.
This is not financial advice.
Buckle up.
Okay, so let's get those creative juices flowing.
All right, hit me with it.
We talked about Egypt and the potential for a massive gas discovery there.
Right. Big potential.
So what if, just hear me out,
I'm listening.
what if we buy call options on APA stock?
Call options. Interesting.
Yeah, but with a strike price way above the current market price.
So you're betting on a big jump in the stock price.
Exactly. If they hit that gas gusher,
If they hit it big.
those call options could be worth a fortune.
But that's a risky play.
It is.
Exploration is unpredictable.
Sure.
They could come up empty
Yeah, that's always a possibility.
or hit unexpected problems.
Okay, so maybe call options are too risky.
Maybe a little too speculative.
But what about their overall natural gas strategy?
Right.
It seems like they're in a good position to benefit from the growing demand for natural gas.
They are well positioned.
So maybe there are other investment opportunities.
Possibly.
Yeah, that are less risky, but still aligned with their long-term vision.
That's a good point. It's all about finding the right balance between risk and reward.
Exactly. All right, folks, there you have it. Another episode of This Is Not Financial Advice.
Always remember,
This is for entertainment purposes only.
do your own research,
We are not financial advisors.
consult with a professional.
And never invest more than you can afford to lose.
Sound advice.
All right, well, that wraps up our deep dive into APA Corp's Q3 2024 earnings call. We hope you enjoyed it. Join us next time for another exciting episode of Talk Tickers, where we break down complex financial topics and explore the world of investing. Until then, happy investing. So what if we take a gamble and buy call options on APA stock with the strike price significantly above the current market price? It's a high-risk, high-reward play. If they hit that gas gusher and their stock takes off, those call options could be worth a fortune.
Now hold on a second. While that's a daring idea, let's not forget the inherent risks involved. Exploration is unpredictable. What if they drill and come up empty? Or encounter unforeseen technical difficulties? The price of natural gas is also notoriously volatile.
Okay, so maybe betting on a single exploration outcome is a bit too extreme. But their overall strategy of shifting toward natural gas seems pretty solid, right? What if we take a step back and look at the bigger picture?
That's a more balanced approach. Instead of pinning our hopes on a single event, we could consider APA's long-term potential in the natural gas market. If you believe in their vision and their ability to execute, there might be other investment opportunities that align with a more moderate risk tolerance.
All right, folks, there you have it. A speculative deep dive into APA Corp's Q3 2024 earnings call, sprinkled with a bit of "this is not financial advice" fun. Remember, we're not experts, and these are just ideas to get those investing gears turning.
Always do your own research, understand the risks, and consult with a qualified financial advisor before making any investment decisions.
Exactly. We hope you enjoyed this episode of Talk Tickers. Join us next time as we dissect another earnings call and explore the exciting, sometimes baffling world of finance. Until then, happy investing.